You're listening to the House Hacking Podcast, the blueprint for one of the best financial life hacks there is. House hacking. If you are looking to get ahead financially or learn about the easiest way to get started with real estate investing, then you are in the right place. Stay tuned and join a community of individuals from all walks of life that use house hacking to eliminate their housing costs and accelerating their path to financial independence. Your number one place for all things house hacking.
Welcome back to the show, and I got to tell you, it's been a little bit of a crazy morning. We've got this double header of a hurricane coming right at us here in the Gulf. Folks that have been listening to the show for a while know my wife and I are down here in New Orleans, and while we don't really own that much property anymore, we still do have our third house hack, which is just across town, and then, of course, our fourth house hack. But we've been spending the morning just trying to prep for the hurricanes that are coming at us, tropical storm, and the other one's looking like it's going to be a Category 2. So we just went by, did a little bit of preventative maintenance, checked, make sure everything was cleaned up, and hopefully the hurricane veers away from us or fizzles out completely. But it was definitely a hectic morning before we got on here nice and early with our guest calling in from Arizona. And let me tell you, today's guest I've been wanting to have on the show for such a long time. If you're in the real estate space, you know who this guest is. And now if you're in the personal finance space and you really haven't delved into real estate that much, you're going to want to really look up this guest and check out his site. I mean, he has a plethora of articles all over the place. Now, on this episode, we actually do get a little bit technical. Instead of sort of slowing down the conversation to sort of dig in on a couple of the topics that we go through or some of those acronyms, I thought I'd just let the conversation keep rolling, and we're going to put a lot of stuff in the show notes for you. So listen through it, go check out the show notes, and then I'd recommend listening through again, because our guest today just has an absolute wealth of experience, and he's just got a fun, very blunt, open attitude about life. So with that said, let's go ahead and bring on our guest today. Ben, thank you so much for being on the show today. I mean, you've got just a wealth of experience. I've been following you for years on Bigger Pockets. Thank you again for coming on. I mean, how you doing, and where are you calling in from for folks that don't know you and haven't heard your story before?
Where do you find those folks that don't know me and haven't heard my story? I mean, you must be digging deep and wide and far to find those folks. I am in Arizona. I'm in Phoenix. I moved to Phoenix about 4 years ago. And it's 6 a.m. and I got up at 4 and I got some work done. And now hoping to squeeze this podcast in before my family wakes up. And of course, everybody's home for whatever, why. And so my house turns into mayhem when everybody gets up. So I'm just trying to knock this out before they do.
Awesome. Well, thank you again. I'd love just to start at places, for folks that are in the real estate space. They've obviously heard of you. Why'd you end up moving to Arizona, and sort of why'd you get into real estate in the first place?
I got into real estate because I was diagnosed with a medical condition called multiple sclerosis. And I was a classically trained violinist by trade. And I was advised, probably rightfully so, perhaps to look at other avenues of building a career and making money. That's why I got into real estate. And that was 2005, 2006. Why I'm in Phoenix? Because I came from Ohio. And as a logical and reasonable person that you are, Andrew, here you have Ohio. Here you have Arizona. Where would you rather be?
Pretty much Arizona. Yeah, right.
Thank you. So that's just, do I need to say any more?
Enough said. So when you moved to Arizona, and, I got the intro that we said before this, so folks have an idea of where you're at in your real estate investing career. You know, you had a nice portfolio there in Ohio. You moved there to Phoenix, and you started looking at house hacking with this idea of trying to control your burn rate. And one of the things I loved, you actually said in one of your articles was, you know, you didn't want to go after multifamily because investors want it and house hackers want it. And you ended up going through this sort of multi-generational floor plan. Can you just
Right.
sort of tell us a little bit about what that style is?
Well, first of all, I didn't want multifamily because quality of life for me was the kind of the defining hurdle. Even though I did want to control my burn, we just came to a new place. We got to look around, take a few double takes, and figure out what's going on and how to land on our feet. So one of the things I thought would be wise to do was to control the burn, to limit my outflow of cash. And, house hack was one tool in that bag to kind of contribute to that overall objective. But I wasn't willing to sacrifice my quality of life just to save some money. I think saving money is important, but I don't think that mentally, psychologically, us humans, that we can tolerate compression, for a long period of time without personal kind of moral, whatever satisfaction. It's very, very difficult. And I don't want to go down that road. And in a traditional multifamily, that's exactly what you're doing. There's several problems with that. One, you have neighbors next door. Two, you have to evict people because in a traditional setting, you're signing leases. If you sign a lease, you have to go through the eviction process. You become friends with your neighbors next door. It's a very complex and intricate thing. I don't know that you want to bring real estate business into your personal life. It could turn out to be quite difficult to navigate. So with that being said, I realized I needed a hybrid of some sort, okay? In addition to that, it became very clear, Airbnb, velocity of money, short stays, fast, you're getting paid instead of once a month, you're getting paid 4 times a month, 6 times a month, whatever your minimum stay is. So you're making a lot more money because the velocity of money is faster. And so generally speaking, when that happens, you make more money. So, with that being said, I looked for an alternative and I found this house, and Arizona has quite a few of them because of the nature of what Arizona is, which is a retirement destination / an incredibly fast growing market, economically speaking. So they have these houses, they call them multi-generational houses, or they call them, casita houses or whatever. But basically, there's a main house, and then one way or the other, there's an attached casita, mother-in-law suite, however you want to call it. And that's what I bought, and I threw it on Airbnb, and it worked out very well for as long as it needed to provide that functionality of creating a revenue stream which would significantly offset my costs, my burn rate, so to speak.
And I'll link to the article in the show notes for folks that are listening, but you essentially took, a $2,000 a month place and got it down to where you were about $750 a month to live there.
Right. And some months less. It was nice. And it's not like I needed to. It's not like I wouldn't have liked this house in the first. It's a nice house. It's not like I wouldn't, if I didn't have that in fact, I'm not doing that anymore. I'm still living in the same house, but I'm not doing it anymore. I just had somebody reach out to me yesterday. Wanted to stay for 45 days. I'm just, I don't need it. It's a tool that was created by me in my life in order to facilitate a certain end goal. That end goal doesn't exist anymore. We've been here for 4 years. We're very comfortable. We make very good money. I don't need it anymore. Is it nice to have still for family and friends? Absolutely. I just don't need it as an income stream per se. So, everything has its shelf life.
Absolutely. Yeah, and I think it's a perfect example of, now you've got the place to use it for family and friends when they come and stay, and now you don't need that income stream. So, that's sort of a summary of your house hack. You've got so much stuff out there. Again, for folks listening, I'll put that in the show notes. But one of the reasons I really wanted to get Ben on was his approach to deal analysis is just phenomenal. He has this very methodical approach. He's someone that I would actually trust to underwrite my deals. You know, how'd you start taking this approach? And I mean, I guess just share with us a little bit of how you actually look at deals from when you were underwriting those smaller multifamily in Ohio to now how you do it on these $20+ million apartment complexes that you buy.
So I think the difference between me and a lot of people is that I look at dynamics a lot more closely, and then I extrapolate numbers from those dynamics. So instead of asking a question of how much is the economic loss going to cost me, I ask, with this tenant profile, what are the likely circumstances that are going to come up in this particular person's life, and what are the likely responses from them that are going to take place, and how's that going to cost me? So that's difficult to do until and unless you've been doing this for a long time, because a lot of psychology is involved, a lot of knowledge of how people behave in different circumstances, what happens to them financially, all that. So it's difficult to do until you've been doing it for a long time. But numbers to me really paint a picture. They're like color, like you're an artist and you have this color palette. Which color do you use? And which colors do you mix, and how, and what proportion? So just because you have a fantastic color palette set that you paid $1,000 for and it's got every color known to mankind, doesn't mean that you know what to do with those colors. That's the experience, and that's the ability to internalize the process from a dynamic standpoint that begins somewhere other than the numbers. Most people go straight to the numbers. And of course, you can use those colors to paint anything you want, but is it going to be lifelike? Is it going to resemble life? Or are you going to paint something that maybe you see in your mind's eye, but it doesn't have any relationship to reality? What is likely to transpire? So, when you underwrite, I think it's very important to start with what is likely going to happen, and how can you paint that with numbers, and then how do you mitigate that? Yeah. And of course, you can't know everything up front, 100% of the time, all the time. But reality is, why did I not want a duplex for a house hack or a fourplex for a house hack? Because I've done enough evictions to know what that entails, and I did not want that in my life. And that was what determined the style of house hack that I did. The reason I did that versus something else.
Yeah, absolutely. So, I mean, when you're underwriting now versus, say, 5 years ago, do you feel, put COVID aside for a minute, are you more conservative with your underwriting now than you were 5 years ago, or do you feel like you've loosened up in some ways?
I am much more dialed in because I know much more. So, I did not underwrite the way I do today. I did not underwrite 5 years ago. I just didn't have the intellectual knowledge to underwrite this 5 years ago. So it's just a lot more dialed in.
Yeah. And what's something you think you could take away where, like, if you were to go back and say, all right, Ben, 5 years ago, here's something that you should actually start looking at now, or how you should approach analyzing those numbers differently that you now know now because you've got more experience?
Well, the main difference is, of course, now I'm in Phoenix, which is a high growth market. And behaviorally and on paper, that means something. So it's very difficult for me to compare my perspective on the market when I was sitting in a small town in Ohio versus when I'm here in Phoenix. Those two things are incompatible. So the one thing I tell myself is get the hell out of Ohio sooner. Okay. Because you can't really, it's like I'm a violin player. And if you gave me a Strad or a Del Gesù, I could make it sound very nice. I have nice technique. I could make it sound very nice. The thing of it is that I am good enough at this point that you give me a cheap Chinese piece of shit violin and I'll still make it sound nice because I'm that good. Now, take a student who's not as good. They need the best tools possible in order so they can become that good, so they can experience how to grow their technique and understanding of sound production, because they need you need a better instrument in order to learn that technique, to grow that technique. So that fiddle is the market. When you're sitting in a small market, your perspective on dynamics is relative to that market which you see, which is very, very different from when you are in Phoenix or Florida or Texas or someplace that's growing, right? So I don't know that I would compare my underwriting per se. I just tell myself to get the hell out of Ohio soon.
Yeah. I mean, is that a piece of advice you'd sort of want to give to people, though? If you're in a small market, don't invest in a small market and invest in a big market. I mean, because you still have some of your properties back in Ohio, correct?
Yes, and I'm not in the business of giving people advice anymore. I'm in the business of pissing people off by telling them how it is. But you can make money anywhere, but you can't be me in a small market in Ohio, in a small market Indiana, in a small market Kentucky, in a small market Midwest. You just, in order to be me, you have to be in a growth market. Yeah. That's as simple as it is. You can't do what I do, in a small market in Ohio.
So what are characteristics then of a growth market? How would you actually define it? So you're obviously there in Arizona, but if you were to go out and start looking at different places across the country, what are some of the data points that you would say, all right, this is actually a growth market?
This isn't really a secret. It's not my job to analyze this. There's professionals who do it, and all I got to do is look at the data. You've got job growth, you've got population growth, you've got rent growth, you've got low property taxes, you've got low insurance costs. All those things combine into a good, obviously conservative environment for businesses and things like that also helps. So you've got Florida, you've got Texas, you've got Atlanta, Georgia, you've got Phoenix, Arizona, you got Carolinas. Research Triangle is very nice also. But we all know what those markets are. This is where the tech is. This is where the medical is. This is where banking is. This is, you know what it looks like. And then compare that to the factories in the Midwest, in Ohio, Indiana, and plus the cornfield. Yeah. I mean, can you make money there? Absolutely. But given the choice, I decided to play this game differently. I came to Phoenix because I wanted to be in Phoenix. And very simply put, the reasons for which I wanted to be here are the same reasons other people want to be here. The reasons for which I wanted to leave Ohio is the same reasons other people may want to leave. It's not magic. The weather is better, the skies are clean, the palm trees everywhere, the pool in the backyard, year round. I mean, it's not magic.
Yeah. All right. So, I mean, Ben, then, I mean, looking out over the next sort of 2 or 3 years, I mean, are you doing, do you still keep your properties in Ohio then? If you're sort of saying,
I have them still, yeah, probably not for too much longer because I don't, similarly to the Casita house hack, I'm just outgrowing them. I don't need them very much. And so now maybe time is approaching to let them go, yes. But I'm very bullish on Phoenix, and I'm very bullish on multifamily in Phoenix. And so we're very aggressive buying in Phoenix.
Yeah. Now, I know as far as with, the overall market and folks that had some losses because of COVID-19, I mean, how did you, or I guess, with your approach to underwriting, I mean, how did that end up affecting the apartment complexes you have there in Phoenix?
It had very limited impact so far. I would say 75% of our assets continued the upward trend. 25% saw a little bit of a hit that is now pretty much recovered. But that hit, in a lot of cases, was self-inflicted because we do very heavy lift value add projects. And while a lot of sponsors and owners stopped doing capital expenditure projects. We did not. We thought, listen, if there is going to be a downturn, having a higher quality asset is going to be the safer thing to do. So since we have this pile of money that we allocated for renovations, we might as well just go through the renovations. Well, as unit renovations go, if you have a lack of traffic, then you're renovating these units, you're bringing them online, but you're not leasing them at the rate that you underwrote being able to lease them because of COVID. And so that's where we felt an impact, is that we accumulated some vacant, renovated inventory that we then needed to offer some concessions to blow through and things like that. So it's a process that's unfolding, but the alternative would have been just to go like this and to stop renovating. But in that time, we've probably renovated 30, 40 units in the last couple of months. So it's, what ultimately creates value is higher revenues. And you get higher revenues by creating nicer product. So we don't want to slow down that process just because it's COVID.
Yeah. I mean, so does that translate across to smaller units then, in your opinion, of I should always have a better quality product for a similar price than all my competition? So whether that's a 100-unit, $20 million deal, or, you've got a duplex and you're renting out the other side.
I don't know. And I don't know anything but Phoenix.
Yeah.
I would not be trying to do this in Ohio. That's all I can tell you.
Yeah. Nothing wrong with that at all. Well, Ben, I really appreciate you coming on to sort of share a little bit of your story and sort of how you went to use a house hack to control your burn and then changed out of it and sort of not really that tool you need anymore in your toolkit. Where can folks find you if they're interested in learning more about you?
Just askbenwhy.com.
Awesome. And we'll make sure to put that in the show notes. But before we let you go, we like to ask all of our guests a set of final 6 questions. You ready for them?
No, I looked at them. I have no idea what I'm going to say.
Well, I think this is
We'll
one of the
see.
things
We'll wing it.
So cool with Ben. I just love how he's so blunt on all the different shows he's been on. So, all right, number 1, what's your favorite personal finance related resource that you've been looking at recently?
None. I don't do those things. They're all wrong. I mean, I tell you one thing. Do the opposite of what's his name? He's like, don't buy real estate. Don't have any debt. Don't, I can't remember his name. Do the opposite of him.
Okay.
On the tip of my tongue, I can't remember his name. But no, I don't. I got 2 kids. I do a lot in real estate, and I don't. Listen, here's my advice to people. There's a time in life when budgeting is important, but budgeting is about limits. And if you are not careful and you put yourself in the frame of mind where you listen, you have this messaging of limits resonating in your head all the time, then this is who you will become. Would it not be better if you were making so much money that budgeting wouldn't matter? That's my whole perspective. Growth makes it so that you don't have to worry about budgeting. If you make enough money, you don't have to worry about budgeting. Budgeting is essentially ultimately flawed because there's only so much you can cut. Everybody has health insurance payments. Everybody has housing payments. Everybody has auto insurance payments. Everybody has once you've cut everything, there's nothing else left to cut.
Yeah.
So instead of focusing so hard your energy behind how do I save $100 a month or $500 a month, why don't you focus on how do I create $5,000 more a month? And then I won't have to worry about pinching myself $500 a month. It's a different perspective on life. I never heard a personal finance guru tell you this. And that's why everybody's always broke, because they listen to these gurus. Focus on growth. Focus on creating. Focus on making value for people, and then people will pay you for it. Just focus on growth.
All right, so no personal finance resources. I mean, that's a good place then to go into question number 2. I mean, with your experience now, where's your sort of go-to resource for learning more about real estate? You know, book, podcast, website, or are you sort of at a point where you're not trying to consume more of just general real estate knowledge?
I am not trying to consume more real estate knowledge. I have enough going on where every day I learn something from the things that I do.
Yeah.
I don't, Now, do I have questions once in a while? Yes, but I have numbers in my phone that I can dial to ask those specific questions. But I spend very, very, very little time, practically no time, on internet resources, podcasts. I mean, I've been on so many podcasts. I don't listen to podcasts. Even BP. I mean, I can't remember last time I left a comment. It's been a long time. I don't do it.
Yeah, nothing wrong with that at all. So question number 3, what's been your favorite travel destination you've been to so far?
I really enjoyed Cadiz, Spain. It's just got a vibe. It's very nice. But I'll leave it at that.
Awesome. All right. So what's next on your travel vacation list? Are you trying to do anything during COVID, or what's planned for after?
Well, we've done a bunch of stuff during COVID. But I think next on my vacation list is that I think I want to buy a house up here in the mountains. So it's an hour and a half, 2-hour drive, and just for the hot season to be able to change the scenery. So I think that's the focus now.
I'm right there with you. We're in New Orleans, and we're getting ready to head off this weekend to spend 3 weeks up in the mountain just to get away from that August, September heat, which is just sometimes miserable, and be up in the mountains where it's 60 degrees all day long.
Exactly. And especially for you guys, you have humidity.
Yeah.
Down here, it's hot. We don't have humidity, at least. But, and there's places here where within an hour and a half drive, literally you're dropping 30 degrees.
Yeah.
And it feels very nice. So that's probably going to be the destination we work on for a while here.
Cool. All right. So question number 5, what's the biggest bucket list item on your list that you have not accomplished yet?
I was thinking about that one. I don't have it. If we're talking about things, we have 2 Teslas in the garage. I'm just going to leave it at that and say, who needs more?
Yeah. Yeah.
Like, what in life can you not be satisfied? Okay, so bigger house. Fine. Nicer house, more expensive house, a lot of bigger backyard. Yeah, more vacations. I mean, it's like whatever. So clearly we're not talking about things. So we're talking about conceptual stuff, self-growth stuff, and all I really ever have wanted in life is to be better tomorrow at something that I was today. And as long as that happens, I know that the rest of it, the relationships, the money, all of it will materialize. So long as my intellectual worth moves the needle just a little bit from day to day. And I don't really have like a final destination. I don't have a magic number. I don't have a magic number of units. I don't have a magic number in the bank. It's like life's too fun to be, I don't have that. Yeah. So there was a point in life when I thought it would have been really cool to drive a Tesla. Like, I'm not one of those guys that wants to fly to the moon.
There's nothing wrong with that approach of just like, I don't need to have this giant goal out there, but I just want to be better today than I was yesterday.
Yeah, because the giant goal materializes all completely by itself if you travel that path.
Yeah.
So my objective is just to become some way, shape, or form a little bit better on the next thing that I do, next thing that I pursue. And that could be a vacation, and that could be a house, or that could be the next purchase, next complex, or whatever. It's just coming right back to growth versus budgeting. I just don't even want to think in terms of, like, I'm just focused on growth, just expansion in some way.
Yeah, and I think that's a great answer for question 5. So our 6th and final question, do you have a favorite life hack, something that makes life easier for you, help save you some time?
Yes, Tesla.
Tesla?
Flat the freak out Tesla. If you've got the money, the car saves me. My navigation skills are shit. I'll be honest. I'll admit it right here. I couldn't find my way in a toilet bowl. Okay. It's horrible. So having the Tesla that knows where to go is fantastic. It's a lifesaver. I cannot imagine driving another vehicle, and not because of the driving dynamics or anything else, because the navigation is so much easier. That's my life hack.
All right, Ben's life hack. Get a Tesla if you've got the money to do it. That's awesome.
Well, actually get a Tesla even if you don't have the money to do it, because you'll grow into it. It's the reality of it. It's like, when are you ready to buy your first $10 million complex?
Yeah, at some point you just got to do it.
At some point, you just got to, it's like, it all comes back to quality of life. You get in the car every morning and you think to yourself, this guy, Elon Musk, he took this thing from an idea to paper, from paper to factory, from factory to a company. Do you know how much those shares are worth right now? $2,000 plus. I'm not going to tell you what my basis is in those shares, because I don't want to upset you. But I'm making money in those shares. I mean, if he can do that, why can't I do something in my life that's audacious and bigger than I realize that I can? Or it's like you surround yourself with things in life that inspire you to be better tomorrow than you were yesterday. And Tesla is one of those things for me.
Yeah, awesome. Well, Ben, I really appreciate you getting up early and taking a little of your time this morning before the rest of the family gets up. Thank you again for being on the show.
It's my pleasure, Andrew.
Yeah, thank you.
Thank you for having me.